Good, everybody, still here. Daily Market Pulse. That's Tuesday, July 29th. We're almost done with the month here of July, first month of the new quarter. And chop, 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 up and down, up and down. At this time, we were lower, and we did it on higher volume. There were some sanctions on Russia that came out that coincided, but not horrible. Not horrible, but still, we got a high count on the distribution count, so we're not looking so hot here lately. Let's go look. There it is. There's the red can. There's the Dow holding relatively well at the pivot area above the 50-day moving average still, but you see that it was higher above the 8 and then it went lower. So now it's definitely lower going to the 50, looking lower maybe to 16,750 or something like that. Possibly. We'll see how that works out. Right now it looks more downside than looks. Yesterday it looks a possibility of upside. It was started that way and then that was it. This looks a lot like, well, right now it's still holding support at the 20 as well. So there's support here still, it appears. But we'll certainly have to see just how this is going to pan out here, of course. It's holding for now, but still looking kind of on the lower side. There's a pivot area across 1960, and then we're looking all the way down to 1925 after that. It's still got a clear 1990, 1995 to 2000 to really be on the long side. And you look at the NASDAQ, same thing. Barely, it's not really holding on to the 8 moving average anymore. It's actually closed below. It's right above the 20, however, so there's still some reasonable strength there. It's going sideways 3 days in an island above a window and below a window. So there's a window right here and another one right above it. Whoops. Right there, of course. So window, window. So 2 windows in vicinity. It's just kind of stuck in the middle. I think there's a song by that, isn't there? Stuck in the middle with you. Okay, let's see. So that's for that, but still looking like the possibility of lower just based on the distribution count. It might just go up and retest the window on the upside. Room to 4,500, of course, but will they get there? Another question. That's hard to say because right now the Treasury still looks like they go higher. TSX is looking like with a shooting star hot on me yesterday. And a little bit of an upper shadow the previous day on Friday that this is starting to weaken and soften, especially with the overbought condition. I'd be looking for downside into the 8 moving average at a minimum, possibly the 20. The DAX was trying to hold on to 9,600 here. It seems to be reasonably well. It's been fading for quite some time anyway. Down, up, lower lows, lower highs. It's still trending to the downside, but this might be an area for looking for some support. On the DAX, US dollar, Canadian dollar tends to go higher when the markets are lower. There it is. Nice bump up. Everything will still look bullish even after that little pullback yesterday into the 50-day moving average. It still has a target of 109 to probably almost as high as 109.50. Euro would then be likely on the downside. There it is, still fading. Nothing real powerful on the bullish side here at all. Even though it is oversold, there's still room possibly to the downside. This could still go, I'm not sure where exactly. Let's see. Well, this is an area maybe where there's going to be support here, I suppose. Yeah, possibly. There's a window there. No, there's not a window there. Yeah, there is a window there. So right across here, that's your support area right there. And then Treasuries, as mentioned. Treasury is still channeling higher. It kind of went sideways for a while. Then we hit above 136, 137. Now clearing 138, looking for 139. So it's clearing resistance now. So it's either going to be a falling off the roof or it's going to be just a continuation. And there's oddly, the yen is weaker. It's still kind of sideways with a slight upside bias, but really at this point it's below the 20, below the 50. Just because I say the series of lows are still going up. They're not actually making new lows as of yet. So even though the moving averages show a little weakness, that's just because there's been more sideways than anything else of recent times. And gold has just settled here a little bit after a decent support area near 1290 to 1300. Still looking for the possibility of the upside as a safe haven. Could go higher into near 1400. Same thing with silver, holding at the 50, near the 50 and the 200. Looking for the possibility of a bounce. If it fades, then you're looking down at about 1950 to 1975. And then crude. Crude was kind of a little bit all over the place today. Started down, bounced reasonably well late in the day, and still trying to bounce right now. In fact, when you look on the intraday, see how it's come down. It did a double bottom here at 100.5 and then started to come back up again. So we're looking at a target right now of 125, at least initially, another 20 cents, 21 cents or so. For the time being anyway. Then we'll see if this actually holds and goes higher, or do they fade it lower to make it oversold, and also retest the lows on the daily chart at this point. So now we're going to go to small caps. Then we'll finish off with the VIX. Small caps, big decline, bounce back into the moving averages, back to 115, and then reverse, falling window, another island. Actually below two windows, in fact, but one in particular, and support immediately below 112. And below 112, especially 111.50, you're looking at lower levels of 108 to 107. Now, the VIX getting a little jittery. It was up pretty strong last week, if you recall, 5 days to the downside for the most part. Decent bounce yesterday, but retreated off the high. And then a nice support at 1250 above a rising 20, flat 50, but with a crossover of the 20 over the 50. So this is starting to look like it's perking up, forming a rounded bottom, going back towards 16 to 17. I mean, treasuries are probably higher. Markets are probably lower. Okay, so with that, I leave you.